It's probably gonna stop working. It's probably gonna stop working, and I'm gonna have to do something else, okay? I'm gonna go back to delivering pizzas. So we go to the high, put it right there, okay? And this is complicated. You're gonna drag it down to that low, right there. Now, get yourself a drink, calm down, because that was a lot, okay? That right there takes a lot out of someone. And I don't know about you, but I need a drink. All right, so now let's assume for a moment we take a visual of this, okay? And if we duplicate that, now I'll show you what I mean. Let's look at it like this. Here's, I gotta fix that in a second. Gotta go back on the actual low. Am I boring any of you? Are you having fun? You missed me. I know you did. I missed talking to all of you. I did. There we go. All right, so that's the range that we're going to be using to duplicate or run standard deviations away from this. Okay. So a perfect deviation would be here. And that gives us one multiple of this range from that low up to that high projected straight down. It's about right there. So that means at this low over here is very, very likely to happen. Okay. So now watch what happens when we take this idea and we put a little bit of market wizardry and add it to that. Okay, we're going to go in here, and where is my standard deviations? -2. Okay, -2. I want you to look at the low of the chart, the bottom of the chart. You'll see a line appear and disappear. Ready? See that? See that? 29,878.75. See that right there? Isn't that cool? Now watch. Extend to the right. Oh my goodness. That looks like it's the low of the day. Retell me this. Yeah. So if we break this line, this is an interesting level to me because I want to see how it trades. Okay. It drops down. Wonderful. Okay. Great. I want to be part of that. So I got to wait until the opening bell. I got to get in there when it starts trading. So we see this move here. It gets down into this little gap, that little buy side balance, sell side efficiency. Why am I picking this one? Why do you have that one, ICT? Well, whoa! That's the man that's the name that shall not be spoken, right? Why is this one picked, Michael? What's the deal with that? Why are you picking that one? You're just cherry picking. You're just cherry picking it now. That's all it is. You're just making it up as you go. You're resetting your account. Watch. Buy side balance, sell side efficiency. Can we make it a little wider? You can see it. I'm gonna mess around here and it's gonna cause me a problem. All right, let's see. We're gonna zoom in right here. I'll have you know this is not easy to do with a touchpad. Okay. So respect my grind. This right here, that buy sign balance, sell sign efficiency, gets delivered to here. So it's rebalanced. Okay. It goes up, down, and leaves it. That means this is balanced. But what was its first utilization? Huh? First utilization. Buy sign balance, sell sign efficiency. So if we're bearish, what will this become? If we trade lower, it's going to be an inversion fair value gap. How do we know it's going to be an inversion fair value gap, Michael? Because it was utilized as a bullish fair value gap first. Oh my goodness. You're teaching me how to pick the real fair value gaps and when to pick the real inversion fair value. Exactly. As daddy only can. Okay. Same thing here. Buy side balance, sell sign efficiency. Why am I picking this one? Because it was utilized right there as a bullish PD array and stopped exactly at consequent encroachment. Two rules. If it's a buy side balance, sell side efficiency, either the low or consequent encroachment must, absolutely must be respected. Or you can't go over here and say, well, I like this one here. It might use that. I see a lot of live streamers. I sit in there quietly and watch them, and I bite my tongue because I don't want to embarrass them in front of their audience. But they're not teaching things that they're going to say it this way. They're teaching things they don't know, and they're talking nonsense. Okay. And that's why I'm teaching. I'm trying to be silly in a way and kind of like cartoonish this time around because I'm trying to desensitize the people that I'm hurting the feelings of because you're making money off of my stuff and you don't know how to do it and you're misinforming people and you wonder why people go around on the internet saying, "Oh, this stuff doesn't work." Yeah, because you learned from the guy down the street. The guy down the street didn't invent it. So when we have this and we're looking for lower prices, look how it's sliced right through that. It couldn't even get back to consequent encroachment, which is important because it used it here to go higher. Now stop for a second. I said a lot of things already. And for someone that's brand new, it seems like a whirlwind of word salad. But for many of you that have been around for a while and you've been trying to find the secret to deciphering when fair value gaps should form, which ones to pick, I'm giving you the very specific criteria. You don't need to buy my books. You understand? I'm teaching it here on the channel for free. The books are just simple little rules. Here's what it is here, an example here and there. That's it. It's just me getting the credit that's deserved so that we can take it right back and channel it right to the Lord because that's where it comes from. Okay. So when we look at how we leave this area and we quickly drop down into this level, how we got there so quickly, that indicates to me that I do want to be short and I do want to be looking for lower targets. But here's where I did it wrong. What May 27th, 2026 at 2:33. I like the time. I'm just tossing in an airfish for you, Kit. Not that there's a specific time importance there. I just did that because, I ain't talked to you in a while. So the idea of anticipating a PM session sell off, I was affording myself the luxury of being able to capitalize on that. Okay. And I was going to tape read that with you today. But, the market being what it is, it felt inclined to just go through everything like a freight train and trade all the way down to the target that this big blow off run here and Michael's market structure, institutional market structure, refer back to this low here. I'll give you more specific rules, okay? But I'm just teaching you conceptually where it leaves a lot of the people that are selling mentorships, they're not going to know how to do this again. They're not going to be able to replicate it. But you will be able to see this in a very short period of time. Let's put it that way. Okay, I can't give you a date, but it's going to be this year. So when that fulcrum point is broken here, we know that we're looking for an eventual draw down into this. And I admittedly wanted to see that usually occurring between 2:30 and 3:45 p.m. That's when I anticipated this being hit. But I was off because it just kept on just breaking lower. Once we got down below this fair value gap here, it started performing as you would expect. It hits the low of it. It stays heavy, breaks lower, another CIBBY. I split that range in half, and it's the consequent encroachment. And look at the bodies respecting that. Just beautiful, isn't it? I was looking at price action, just thumbing through some of the charts while I was warming up to it, coming back this Monday night. And I was like, man, I bet you a lot of you folks were struggling with all this price action that was going on without me being here. It was a mess. It was like somebody was just like keeping everything all mixed up and jumbled up, and the price wasn't really all that clean. It was just real fuzzy, right? Wasn't it? It's like real fickle and fuzzy. Well, it seems like it's trying to get back into a better grind, another perfect scenario where price action could be utilized in the way I teach. And I'm hoping that we get more of that going through the summer. I'm hoping that we get a very liquid, smooth, nice delivered summer. I hope it goes against the grain of it normal. Okay, because normal tendency is that the market becomes really just gnarly and just uncooperative, and it doesn't give you that real clean price action that gives you real clear setups. You can get in, get out, move to the sidelines, and be content. Here, it feels like you're arm wrestling a bodybuilder, and you haven't eaten in 4 days. It's just you feel powerless sometimes because the market just isn't trying to cooperate, and you have to learn to take a step back and say, you know what, I'm not going to force this issue. I'll wait for better conditions. But if you try to quit your job or try to make a living off of trading too soon, you can't do that very easily, can you? You feel like you have to do it because you've taken on the responsibility of only living off of what you earn. And that's why I teach you to have 2 years living expenses and $100,000. And if you can't do that, I don't think you're equipped. I don't think you're equipped. but that's another discussion for another day. So the market sells off here and then grinds down right down into that little level right there. Where's that? So the low on this comes in at 877 half, and the projection comes in at 878.75. That's pretty good, man. No matter how you slice that, that's pretty good. Okay, that's pretty good. And we're sitting inside that range between two pools of liquidity. See that? So all of this in here, I was hoping it was going to do something like this through the lunch hour, but up here, not so deep to where I was expecting it to reach to. Now, the next pool of liquidity I'm interested in is this one right there. That's the relative equal lows. Now, here's where it could do something like this. It could go down here and take that low and leave that one. Why? Because we had such a precipitous drop from up here. So it's how real like it just careened lower, which was fun, but it would have been more fun if I was in the whole position, right? So now I gave you a couple things in this lecture today, and let's see.